Good day. This is Doyle Roberts coming to you live from globalfinancier.com. I am the founder and CEO of globalfinancier.com, and today we're going to be talking to you about the venture capital process. What is the venture capital process? Most individuals out there starting a business who have a business idea or concept, they're wondering, what am I supposed to do to move from this idea to getting venture capital funding? Most individuals or most entrepreneurs must come to realize that the steps that have to be taken are simply those steps that will reduce perceived risk for investors who are looking at your project. The most difficult aspect of most interactions between investors and entrepreneurs comes about during the due diligence review, in terms of looking at all aspects of your business. Most venture capital sources will often require that you have to justify every assumption that you make within your projections, within your 3 to 5 year projections. Your business plan has to show the investment parameters that are requested, as well as you need to plan to liquidate the investor's position or the exit strategy for your investors at a later date, either through a payback formula or through an IPO, which is an initial public stock offering, or plans for a merger or buyout by a major company. In the US right now, there are 6,700 venture capital pools, private firms, SPICs, and corporate investors, with over 200 billion under management. And this is just the US. This doesn't consider Europe, it doesn't consider Asia, etc., etc. But here it is, within this globalized economy, you now can go outside of the borders of your country to raise money. You're not just limited to raising money within just your own jurisdiction. You will find in a lot of instances, a lot of venture capital firms and sources will come together and do joint ventures, so to speak. So you won't always find that the deal that you're trying to put together is going to be a easy, clear-cut, defined route. But there are some fundamentals that you need to know in terms of the levels of research and planning for every startup, in terms of the various stages of within venture capital funding. To break it down a little more, there are 7 levels of research and planning for every startup. The first level is the feasibility studies. And the feasibility study will determine whether a venture should be attempted or left alone. After the feasibility study, the second phase would be the preparation of your business plan for the first round and subsequent rounds of investment and operations. The third step would be determining the optimum debt and equity ratios and developing a financial plan. The fourth step would be the development of an operational plan to get the project up and running. The fifth step would be the development of prospective funding sources for both debt and equity. The sixth step would be the preparation of project evaluations for both pre- and post-investment analysis. The seventh step would be planning investor and owner exit strategies through mergers, acquisitions, be they IPOs, LBOs, or ESOPs. In terms of what you're going to encounter when you're looking for money, you'll find that there are a number of different venture capital stages. We will get into that during the next presentation. But in terms of the general layout, if you follow those 7 levels of research and planning within your startup company or within your developed company, you will find that you will get good results. I want to thank you for your time. If this information has been beneficial to you and you would like to receive more information of this caliber and quantity, You can go to our website, globalfinancier.com, and opt into our free newsletter, and we'll keep giving you information. Thank you, and enjoy the rest of your week, and have a successful business. This is Doyle Roberts signing out.